some confusion about what the impact of the tariffs will be, but let us first start by how US arrived at the tariffs. What the US has done is they've not taken the tariff that India charges or Vietnam charges or China charges. They have taken the trade deficit that US has with India, for instance, divided it by the US imports from India, and the figure that they arrive at is the tariff according to them. Now, for India, for instance, the trade deficit that India has with the US, goods trade deficit, is about $46 billion. And the US imports from India $87 billion worth of goods. So, how they derive the tariff, 46 divided by 87, comes to about 0.52 or 52%. Then the US president says, I'm being kind to them, 52% is the tariff they are charging me, I'm going to charge them half, which is, he arrives at 27%. Now, the point is, why are they taking the trade deficit and why not the tariff? Their understanding is that the trade deficit represents all the tariff and non-tariff and currency manipulation that the trading partner indulges in. That is why we have the deficit. That's how the US is defining it, and the president is actually saying, I'm being kind by giving them only half the punishment that they are imposing on me.
For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people, very kind. But we will charge them approximately half of what they are and have been charging us. So the tariffs will be not a full reciprocal. I could have done that.
Now let's come to the tariffs itself. India is 27%. If you look at competing countries, China has been imposed a 54% because already they have a 20%. Then Vietnam, the tariff is as high as 46%. Now, why are these numbers high? Because Vietnam has a much larger trade surplus with the US, or rather US has a large trade deficit of nearly $100 billion with Vietnam. So again, divide by 2, Vietnam gets a huge tariff of 46%. Likewise, South Korea 25%, Bangladesh 37%, Thailand 36%. Why am I reading out these numbers? Because these are the competitors for India. When we sell textiles, we are competing with a Bangladesh on whom the tariff is 37%. We are competing with Vietnam on whom the tariff is 46%. And then, of course, there are the two big developed nations, EU and Japan, on whom the tariff is pretty stiff, 20% on EU and about 27% on Japan. Okay, now this is the kind of tariff imposed on all goods. Let me just come with an exception. For all pharmaceutical or most pharmaceutical products, the US is saying it will be 0 for now. But we are not sure. It can be increased, and we don't know if all pharma products are included in that. And then for steel, aluminium and auto, the US president had already imposed a tariff on all countries, a similar tariff that stays at 25%. Okay? The rest of them, country specific. Now, country specific exports. What are the biggest exports from India? They are electricals, pearls and semi-precious stones, mineral fuels, textiles, apparel, iron and steel, some kinds of truck and truck parts, accessories, and organic chemicals. These are about the main items that we export, and therefore all this will become expensive by 27% because that's the tariff that is getting imposed. Now, what is the likely impact on India is what we want to know. Now, the Indian stock market is taking the positivity that if our textile exports to the US is becoming expensive by 27%, our competitor Vietnam will find their textiles more expensive by 46%, Bangladesh by 37%, Sri Lanka by 44%. So we should sell. But economists point out that look at it from the point of view of the US consumer. Will he be able to buy a t-shirt or a shirt which is 27% more expensive? He will perhaps not buy at all. So the chances of a US inflation and a recession are very likely. If the US does not buy several products from several countries, then India's exports to those countries can also fall, because the business in those countries like Vietnam or EU or Japan also falls. And therefore, a general fall in global growth should be expected because everyone will be less able to consume this because of this big tax coming on all of us. The second impact is uncertainty of investment. See, every business house is wondering where to invest. It is very expensive to invest in the US because labor is expensive, but which other country should they invest? Suppose this decide, okay, India is getting taxed less than Vietnam, and therefore say a company like Nike shifts its shoe factory from Vietnam to India. Who is to say that Trump will not change the tariffs? Because everybody is negotiating with him. So all business investments everywhere in the world is going to be almost zero because of the uncertainty. That will have its own impact on growth. And a third channel of uncertainty is equity investors, FPIs. Where will they put the money? Suppose they bracket all EMs as impacted by the US, and so they move from EMs as a basket. Then India will lose FPI inflows as well. So we could get hit because of global fall in global GDP, fall in global investments, and fall in FPI investors, portfolio investors. At the moment, the market is rejoicing that our investments, our companies are likely to be less hurt because the competition has been hit by a higher import duty. But this may be a short-lived joy. It's possible that the world will slowly realize that it is getting into a major slowdown. Conversely, all our analysis could be wrong if Trump is open to negotiation and changes the tariffs sometime down the line. However, that possibility looks less because the president's speech yesterday was very political. He has sold this idea to the US, to his own voters. Will he be able to walk back from this? That looks unlikely. So we should all be prepared for some difficult times as far as the economy is concerned. Thank you for watching us on CNBC TV18. For all news and updates, subscribe to our YouTube channel and watch us on all social media platforms.